Hi, everybody. It's Tuesday, November 11th, 2025. I can't believe it's only Tuesday. This week is moving in dog years. If you haven't noticed, these daily videos are a bit less polished. When I just do 2 videos a week, I try to script the intro and really keep the information tight. So as long as we keep doing these daily, I'm just going to give you a bit of stream of consciousness at the start, where I'm just sharing what I'm thinking about at the end of the trading day. So we did see more selling today, as we were talking about yesterday. Charts are definitely oversold, but the daily looks like it has a little bit more time to drop. And we were getting into some resistance. And even though the S&P 500 was up today, lots of names did sell off, but it wasn't broad-based selling. It was rotation, which is a good sign. And just like on Friday, we saw that rotation out of tech names and into healthcare and financials and a bit of biotech as well. So that was encouraging to see. And I would actually rather see a sell-off moving into the House vote tomorrow. So the Senate voted on Monday, which is probably why we got some of that rally yesterday. And then the House is projected to vote as early as tomorrow on reopening the US government. So I would rather see selling into a major news event like that so it doesn't turn into a sell the news type scenario. But we definitely need to keep our eyes on that tomorrow to see how that develops. Beyond that, semiconductors saw the brunt of the selling today, and as we get in the charts, you'll see that actually the Nasdaq underperformed the S&P 500 today, which is partly due to a lot of selling that we saw in Nvidia, and there are just lots of headwinds for the semiconductor trade right now. We have a ton of news that are really propelling that bearish sentiment for the space, and today SoftBank announced that it sold all of its Nvidia position. Now, that is going back into the semiconductor space, but just with OpenAI and some other trades that they're doing. But still, it wasn't great for the space. We also have the Oracle debt downgrade, Meta's financing and ad games that came out, and then there's still overhang from the OpenAI comments from last week. And then, CoreWeave dropping 20% in under a week. None of this stuff really helps. So the sector needs a boost again, and the market has clearly shifted to risk off between this week and last week. But the question is, will that trend hold and turn into something more? And if you hear some noise here, I've got my trusty helper, Harold, my four-legged friend down here, just came into my office. But I still maintain that the run is not over, but the unwinding of the semiconductor trade is something we need to watch next year. And if you are in Patreon, you know the thesis on that. I made a detailed post on it today, and the plan we have around that trade for early next year. But let's get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting on the S&P 500, and I have removed all the narrative text that was on here. It was getting a little busy, you know what, and I figure it's better for us to just focus on the price action. But we continued our move upward today, and we're really above, this is what I would consider the key zone, this 6,800 level. And the reason I'm saying it's the key level is because it did delineate our all-time high breakout past 6,800 on the 24th of October. But more importantly, it's where we had the start of this massive down bar on the 10th of October. So maintaining above that zone, above 6,800, is a much stronger sign for the S&P 500. And we were already got above there yesterday. We consolidated really above this previous swing here from the 5th of November, above that 6,850 level. Dropped down a little bit today, but continued away in the latter half of the day, which was a good sign of strength. So if we can maintain above 6,800, we are in a very good position for the S&P 500 here. But if we compare this to the NASDAQ still has not passed that pivot high from the 5th of November. So that weakness is evident in tech names, semiconductors specifically. And we have seen that flow over into healthcare, biotech, and financials. So let's look at some of those indices really quickly. Okay, starting here on the healthcare sector, and you can see how we've had 2 very strong days between yesterday and today, breaking this past swing high from the 4th of March. So this is really looking like it's setting up some strong bullish structure. The healthcare sector broadly was in about a 2-year consolidation period from 2021 all the way through 2023, and then broke out and pulled back this year, and now has bounced away. And if we're looking at fib extensions and this move continuing, which now is likely since we've broken this previous swing right here from the 5th of March at 150, I imagine that is going to have us before too long breaking all-time highs and at least going to the 100% extension at 164. So healthcare sector is alive and well. We know healthcare often outperforms in a bear market. The question is this the start of something bigger, or is it something temporary, or can risk assets continue to run at the same time as this? But it is something we have to be conscious of. Now, if we look at biotech, and I'm just pulling up LABU, which is a 2X biotech fund. Biotech has been in a weaker position, broadly speaking, than healthcare, but you can see that biotech has been rallying as well, and you could now make an argument that this is a flag pattern that biotech is breaking out of. And from the April low at $34, we already got all the way up to $134. So over a 3x here for biotech. But if this is a flag pattern and we're measuring out an extension for the biotech space, and biotech is riskier, but we'll just take our measurements here, that would have the 100% fib extension all the way at $208, $209 there for biotech. And then last one, XLF for the financial sector. And if we pull that up here too, you can see how we have had a few strong days since last week in the financial sector, and this might attempt to break the highs here at $54. It seems like that's what it wants to do, and on the daily here, our confluence model bands are starting to squeeze. So it seems like some kind of volatility is going to be coming in here soon. Thing to watch on the financial sector, I suppose, is you could make an argument that maybe it's shaping up a head and shoulders at the top here. So watch that. If this rejects and forms that right shoulder, that's another possibility. So I think this one just needs a little bit more time, but I would say healthcare and biotech to me, even though there was rotation into financials last week and this week, are broadly looking stronger. And we know that the smaller banking institutions are not doing well, but the bigger institutions are holding up okay. Okay, now that we've looked at all those sectors, I just wanted to bring up this chart again, which I think I brought up last Monday. But for any of you who haven't seen this yet, this is comparing XLV, the healthcare sector in orange, XLF, the financial sector in that teal, turquoise, blue color, QQQ, the NASDAQ in yellow, and semiconductors in purple. And this is just to help me quickly at a glance. I always have this chart up to see if I'm seeing selling, glance at this chart and say, are all sectors selling off? Is it broad-based market selling, or is it rotation? And if we say, look here at the 10th, all sectors hit the low of the day at the same time and we're selling off. And then if we go to the 16th, all of the sectors were selling off and hit the low of the day except for semiconductors, which were flat to up slightly on that day. So you can really learn a lot from this. And then there were some other days last week, like this dip right here, where semiconductors in the QQQ on the 4th were selling off, but healthcare was up and financials were up. So you can see that rotation, which again, I would say continued a bit today. The QQQ, I guess everything was up. It wasn't really a pullback, but financials, biotech, and healthcare were clearly still outperforming on the day. Okay, if we just look at some of the semiconductor names really quickly, we can see NVIDIA sold off for a good chunk of the day with a little after hours bounce. That was on the SoftBank news there. If we look at SanDisk held up much better, is trying to push into all-time highs. So obviously the name with strength within this space. MU, which plays in a similar sandbox to SanDisk with memory components, sold off today as well, but broadly speaking is still very, very strong. This is getting up to our price targets at the 1618, which is at 282. So I am going to look for this to find a local top eventually. And then TSM TSM has just been chopping sideways in this range. It does look like it's starting to correct a little bit in terms of a lower low and now potentially setting a lower high. So I would love to get in on a position on TSM because my previous one, I sold way too early in the run. We haven't made it to the price target yet from this previous flag breakout. And, maybe this is just giving us a lead on the semiconductor market that strength is not persisting and maybe it needs some time. This doesn't mean it's over, but it might need to consolidate or correct for a bit before moving higher sometime in a couple months. And if we then look at the last one, which is LAES, this one continued to break down as well. It was looking strong for a bit, but we got into this symmetrical triangle pattern that had a breakdown to the downside and rejected. So it's not looking great right now. If we can hold this confluence model center band on the 4-hour and the 50% level, that would put it in a stronger position. But if we break down from here, I would advise going short on this name and waiting for a much better entry on this. Okay, moving on. OKLO had earnings today, and it was an earnings miss. The head and shoulders pattern, we're still in that trade. There was a little bit of a bounce after the initial sell-off, but we are into the resistance at that 100% extension that we actually got into after this initial breakup. So this has been a key level for us at around 105 for OKLO. So staying in the trade for now. If we hit this trend line at around 91, I would consider taking partial profits on my short, even though the price target for the head and shoulders is way down here at 35. But I would imagine at that point, because we're already pretty oversold on the 4-hour and the daily is getting close to printing a mean reversion dot, that we might get a little bit of a pity bounce there. So I would just be looking to get out of part of it and then reload on any bounce play there. But still, broadly speaking, targeting lower prices for OKLO. And, as we're talking about the semiconductor narrative, semiconductors, and this gets into part of the broader thesis, really energy is the sticking point. And OKLO had some good news today about permits issued, I believe in Idaho, for pursuit of one of their facilities, but they're still a long ways off. They're still not profitable. And it's going to be a while before this one sees some returns. So if it drops to these lower targets, I would welcome getting into a long position out to 2030 or 2032 to see what they can do, because the US is definitely behind in terms of nuclear and other alternative power solutions. But let's look at EOS Energy just as something energy adjacent, but more in the battery storage space. And I think Tesla is obviously going to outperform in that regard. But if we go to EOSE, this seems like it has formed a flag pattern and is breaking out higher, got to all-time highs. So in terms of assets that we're watching that made all-time highs today, just note that strength. And this would definitely be one of those names. Okay, gold did not do much today, still rejecting at the 50% level, but let's move on to Bitcoin. And Bitcoin did have a pullback and now is finding support at the 50-day moving average. We don't really want to stay below 104,000 long. Ideally, this sees a pretty quick bounce, but we often talk about drawing 50% levels, and even for smaller swings from this pullback from 116.4 all the way down to 98.9, if we draw a fib retracement level there, you can see that where we rejected is right at the 50% level, which makes this $107,000 to $108,000 level all the more important to get above. So in the near term, those are still the levels. Even though this was not great to see this selling today, broadly speaking on the daily, we are still making higher highs and higher lows. So if we can recover quickly and get above that level there at, let's just say 108,000 for round numbers, and get back into the confluence model center cloud, which is also resistance right there, that would be a better sign of strength for Bitcoin. We still have the major trend line down below, which currently that support would be coming in at about 97.4, somewhere around there. And, there is a world in which the market is so divided right now. Even if we bounce and find support, there is a scenario where Bitcoin could just chop around sideways for the next couple of months. I mean, we could get into 2026 still chopping around here, being underneath that 112,000 for the major 50% level of this zone before breaking out one way or the other. And, there's price-based capitulation and there's also time-based capitulation where people just get bored and get out of the trade. So that's something to watch out for too, but hopefully we'll have a better picture on what Bitcoin is doing in the next few days. And it is very liquidity sensitive. So if the US government does open back up, hopefully that'll be a tailwind for Bitcoin. And the major thing is really just breaking this trend line to the upside right now. And on the daily chart as well, getting back into the confluence model center cloud would be a great sign of strength. Okay, if we flip over to Solana, it's essentially still the same chart as Bitcoin. So if we draw our overhead resistance lines here, these are still the hurdles that we have to get over. And that $205 remains a key level overhead way up here. But the near-term major resistance is the confluence model center cloud and this blue line. So that's starting at about 176 for resistance. And let's take it all the way to the 200-day moving average at 180. So that whole zone is going to be the major near-term hurdle for Solana to get over. It did sell off a little bit more aggressively than Bitcoin today. So it has a bit more work to do and is generally weaker. But this zone in the high 170s to that 180 level has been an area that has given us a lot of resistance and a lot of support over the last 7 months. So it's definitely an area to watch and a zone that we would want to get above again to show us some near-term strength. Okay, MicroStrategy, not much has changed since yesterday. It did sell off, but found some support today at about $230, where all these previous lows from February, March, and April of this year are. So if it can hold that and Bitcoin continues to bounce, maybe this is a little OKLO. My money, just on how this broke down from this multi-year trend line and got a bit of resistance there, would be that we are going to head lower to that 183 to 186 level. So let's just keep watching this day by day, but really this is going to follow Bitcoin. So if Bitcoin's strong, this should recover. If Bitcoin's weak, this should drop lower. Okay, Tesla, I'm just doing the ultra near-term analysis because we want to see if this consolidation range that we have been in since now the middle of September can break to the upside. And we're still showing a bit of weakness, but also a bit of strength. So if we're just looking at this trend, we made a lower high, lower low, lower high, lower low, lower high, and now it looks like we made a higher low and bounced away. The question is, from here, can we make a higher high? So a good early sign of a turnaround here. The one thing we did not do is hit the price target from this head and shoulders pattern. So I'm still looking out for that. And if we break past these previous highs at 466, then that target to the downside would be off the table. But good early sign of strength today with forming that higher low. HIMS is still showing weakness, but the daily is going to print a mean reversion dot soon. I still think this pulls back a little bit, and that next level I'm targeting is that $35. The one thing we have to watch out for is that the optimized trend here is starting to flip orange. We did that once in April on that downturn and reclaimed it. So if this has a strong bounce, tomorrow or the next day, it can still recover that on the daily, but it's something we need to be aware of. And really anywhere bouncing above $25 in terms of this broader scale would still have us setting a higher low that we could recover from. So in this neighborhood from $25 to $35 is where you would want to see this turnaround on the daily time frame to maintain some level of strength. Okay, moving over to ARM, which a few days ago we thought was finding support at this back test of its breakout zone, but with the weakness in semiconductors, that dropped below the range, and now actually on today's bounce, bounced up and rejected from our previous underside support trend line. So not a great sign of strength. If we bring up mean reversion in RSI, these still have room to correct to the downside on the daily. And our next support would be coming in right around the 200-day moving average at about 140 for ARM. And if we go to the 4-hour just to see a bit more detail, you can see that on the 4-hour we're in the confluence model lower band. And so I would imagine that even if this has a little bit of a bounce, that we're going to take another move lower here. And actually that would put us right in line with 140. So in that zone, I would be interested in looking at a position again, just above 140 for ARM. Okay, BBAI had some big moves after earnings yesterday, up almost, let's see, what did we move up? Almost 30%. Rejected from the overhead trend line, came back down, but the good thing is here on the 4-hour, we bounced from the confluence model cloud, and the trend has flipped blue for BBAI. So, there is weakness in tech right now, but the earnings beat to the upside was a good surprise. And if it holds this level, I assume we're going to attempt to make a push higher. On the daily time frame, we have a mean reversion dot now. We're printing a higher low on the RSI. I don't know if this will correct all the way, but the fact that we're getting a mean reversion dot already is a good sign. And actually, let's just see if we have any bit of a trend we can establish. Not really underside support trend on the daily RSI. But watch this one. After the earnings beat yesterday, that was a nice surprise. And there was a lot of pressure on it today just because of the broader market weakness. But where it bounced and found support is exactly where we would want to see that come in. Okay, UPXI, which has been very weak, had an earnings beat, but it could not sustain that earnings pump. It jumped up over, let's see, on that after hours candle, 32%, over $4.20 before dropping back and closing at $3.42 for the day. So still up 8%, but lots of selling pressure for this still. If we zoom out to the daily time frame, we are now in the confluence model lower band, and we still, from this symmetrical triangle breakdown, have a target way down here at 177. So not great for UPXI despite the earnings beat, and it was a massive earnings beat. So estimate of 1 cent coming in at 76 cents per share. Let's keep our eyes on this tomorrow and see if it can catch a bid. But that selling we saw after such strong earnings and that nice bounce wasn't a great sign. There's still pressure on this, and we really need crypto to come along for some of these proxy plays to really catch a bid again. Okay, one we haven't revisited for a couple of weeks. We had a trade on PayPal a couple of weeks ago and then got out pre-market on earnings. That was a nice little move there. I was disappointed even with the positive earnings call to see how much selling pressure came in for PayPal. But shout out to NJ from the Patreon community. He called this out today, where just the subtle structure here on the small time frames has flipped to higher lows and higher highs here. And the trend model as well on the 4-hour has flipped. We're back into the confluence model center band. So early signs of strength here for PayPal. We do have the point of control overhead at $68, which we sold off a bit before that today, but that's going to be a bit of resistance. If we can get above that, then it gets progressively easier for this asset to move up. And based on the new partnerships, the crypto integrations, all of that, it seems like PayPal could do it, but this stock just is volatile and acts irrationally and chops a lot. I would say it's a range rider, but the range isn't clearly defined. But you get these big swings where you can have short-term trades on it, and it might be worth another crack with a tight stop, say down below 65. Okay, like we've been doing at the end for all these, we're bringing up the big tech names at the end. And in terms of assets that have been showing more strength, the tech names are definitely doing that. And Amazon, I would say broadly speaking, is consolidating above this breakout range here, which are not the all-time highs. I mean, we are in all-time highs now, but the high just before the pullback into tariffs was slightly higher than this range that we backtested locally. But we've made all-time highs for Amazon, and it looks like it's going to break out, and we can actually draw a flag extension target off this. Now, it might be a little preemptive, but let's give it a go. We'll go off the low to the high to that local low. And assuming that is our local low and we're going to continue in the upper band, now our 100% extension would have us at $286. And if we zoom out to our daily, so that's just the local swing, to our broader targets, that actually makes a lot of sense for this move, because that's the 786 of the much larger fib extension going off of these lows here from August of 24 to these highs to the tariff lows. That 100% extension, or I'm sorry, the 786 extension is also around 288, and the 100% extension here is at 322, which interestingly enough is the 1618, which would be the secondary target from this local move. So a lot of confluence there. I like seeing that. So for Amazon to the upside, I'm still scouting an entry, and you might just have to get in it. But that 280 level for a close near term target, and then I would say 315 up to 323, 325, somewhere around there, would be areas to look out for Amazon. Okay, Google on the daily looks like it's breaking out to fresh highs. The charts are still overheated. It's actually not fresh highs. If you look at the after hours price action from the 29th of October, our all-time high was just under $300, which we have not breached yet. But if we breach that psychological level, I assume Google has a bit more left to run in it. We were targeting about 330. Actually, hold on, let me draw this again, because I think I'm getting my wires crossed with another asset. We've been looking at so many things. We were actually targeting, 350 for Google. So even though we're extended here on the weekly and we have a negative divergence here on the daily RSI, it could absolutely do that to hit that target at the 350 before pulling back, because RSI can stay elevated and divergences can form over longer periods than you think. Okay, if we bring up Microsoft, still bouncing from that support level, has not confirmed this as a double top with a breakdown of 492, so something to watch there. And if this does break higher, then we would have to treat this as some kind of flag that would be extending higher, but let's not get ahead of ourselves. And then if we go to Meta is still struggling below the 50% level, but we have deviated very far to the downside. And on the weekly, the weekly could correct a little bit more, but we still have that underside price target at 580. I'm not sure if we'll get there. We did a good job bouncing exactly off the $600 psychological level. So just watching Meta, it might take some time for this one to turn around, but the thing I like about Meta now is that the sentiment is so negative, and maybe that needs to settle for a while. But if they surprise at their next earnings call in February, then this one would be primed to take a pop up just like Amazon did, and Google for that matter too. When the expectations are low, it's much easier for something to pop, and when the expectations are ultra high, then things can sell off even on positive earnings like we've seen the last 3 weeks. Okay, so that is it for the charts. I was tempted to get into a few positions today, but I decided to just deploy a bit of patience because it still does look like things could pull back a little bit more. So I'm just being patient, waiting for the right entry. And if things do continue upward, I will be buying into strength and buying the recovery as opposed to trying to catch the falling knife. But what I would encourage you guys to do is to focus on names that have held up stronger today. And really on any day that there's a correction, look at the names that are outperforming or even hitting all-time highs. While some of those charts may be overextended, and I don't know if we said this yesterday or Friday, but those are the names that are going to most likely outperform when things get back to normal and momentum picks up for the market again and some of this fear is behind us. So I look forward to seeing you guys tomorrow for another daily update. It will probably be an interesting one, particularly if the US government reopens and we see the market reaction to that, but that might not be later in the day. I haven't really gotten a lead on what time of day that would be. Anyway, I hope you guys have a good evening and I'll see you tomorrow. Bye for now.